Hey everyone, welcome to Breakout Wednesday for the 4th of September 2024. It's currently about 9 p.m. on the West Coast, 11 p.m. on the East Coast. First of all, remember there's no financial advice, not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. All right, so huge down day on the Nasdaq last night, and obviously all the US indices and the All Lords had a follow through. You know, they kind of copycat day where it was down pretty big today. Also, it is pissing down with rain outside, so there's a bit of background noise. It's not that much I can do about it. So, look, the market's been going sideways really for a few months, and it's just churning away. Like, hasn't really made much progress since March, has it? Well, really, you know, it's just kind of been churning sideways most of this year. Been some great runs though in the middle of it, and it is easy, you know, a day like today, and I can tell you now, 95% of traders, you know, shit the bed, you know, and stop, and kind of they just walk away from it, and they just wait around. Whereas this is the time that I'm doing a bit more of extra work and just looking at what held up well today, what stocks are still holding their tight bases, and because it's not necessarily going to start dumping another 20% from here. Okay, maybe we have a retracement to a 200-day, maybe we don't, maybe go straight up, like who knows. But it really does pay. This is when you make your money, by getting ready when everyone else is not getting ready. Okay, and so just some of the stocks I've been talking about last week, let's just quickly flick through a few of them and I'll get into some new stuff. SSG went ex-div today, still hasn't broken its resistance. This is just perfect as far as I can stand, like to go ex-div and have a big drop, and just now it has longer to base. I mean, the bigger base, the biggest move. I mean, this is just classic technical analysis, right? Huge base. It's frustrated everyone again by not breaking out and going and having a dip, and you know, you beauty, you know, like maybe it can stuff around for another few months. I'd literally give zero shits how long that takes, but the longer the better. Okay, and certainly just I'm in no rush. It is what it is. The market, you got to let the market come to you. So we'll see what happens. ANZ, okay, so it broke out of this double top that it had a little tight on the right hand side. So still in it. We'll see what happens. Big banks obviously still strong. If you have a look at CBA, it closed at new all-time highs yesterday, and today it dipped a little bit. I mean, this thing's up at 100. Where to go to yesterday? 143. Holy shit, you know. I always talk about it, but I remember when everyone was saying it was overvalued at $80, and now it's at 143. I mean, shit, you know. Anyway, and the other one, the main one I was chatting about is CUE, okay? And this is a churner, and I was kind of just what I was trying to get at last week with you know, talking about this and how it's going to come back and forth, and you know, maybe it's a bit of a retracement, but a pretty down day today. But this is just one of these stocks that just churns and churns and churns, and look, I'm still in it, and I'm being patient. I didn't add to it, you know, but I've got my starter position, and you know, when it broke that resistance, I mean, really there was not that much, you know, it just wasn't much excitement going on. But let's see. Okay, this is a huge base. I'm not giving up on this sucker. I've got my first position on there, and I'm holding tight, and we'll see what happens. So, okay, some setups. First of all, just some quick ones that I've just been had in the watch list for a bit. SIX. Automobile, like there's a lot of these little automobile parts stocks kind of around the global indices that are setting up. Even Super Cheap Auto and the ASX, like it's looking pretty strong, and a lot of stocks in that sector are setting up. This guy's pretty liquid. Like today, it only did 13k, but volume has been dropping off. It can do, you know, a bit better volume than that on good days. But if you look at a 5-year chart, it's clearly kind of, you know, in an uptrend here, broken this downtrend, and now it's put, you know, double top in, triple top nearly, and it's tightening. So I'm watching that one. Hopefully this can just tighten a little bit. Let's have a look at a weekly chart. Yeah, you know, I mean, it's pretty clear that, you know, that could be, you know, a good mover, and I'm watching that. I just need to make sure it's liquid enough for me if it starts breaking out, but that's a pretty good setup. There's this incredibly risky setup on the NISI that I'm still watching. Just the Asian stocks are, you know, some of them have been holding pretty well. I'm looking at Barber and Baidu and seeing if those guys can stack up. This guy's just holding that tight pattern. Even that down day yesterday, it didn't really didn't really fall. So you know, big volume here. It's really holding that gap. So I don't have an entry in for it yet, but I probably should. You know, and look, Barber's it's just starting to get above its key moving averages. I'm just interested in some of these Chinese stocks that are setting up. But anyway, that's that. The other one is Judo that I've been talking about a lot. Had a false start where I got trapped and took a loss, and then the second entry here, and it's just holding above its 10 exponential moving average. It's sitting in your Davis box, and look, I'm still in Judo, so we'll ride her out. Took a quick loss in Maya, but you know, maybe a wider stop loss would have kept me in Maya, but let's just get her up first in a sec. So you know, Maya had a breakout, obviously didn't go on with it, so just a really short, sharp, quick loss for me on that one. Okay, and that's it. Now, just I want to have a quick look at some what's happening on the bigger end of town. Okay, I'll have a look at MIN, Mineral Resources. I'm just going to flick to monthly chart, all right, and then I'm going to get rid of the moving averages, and I'm going to put just a plain old RSI on, all right. And so it's interesting to look just how hammered these big miners are getting and have been getting. I mean, Mineral Resources was, you know, putting in a high of like $96. It's down to 34, and very few times in the history of this stock has the RSI got oversold on a monthly. And I remember looking at the RSI back during the GFC on monthly data, on a lot of the big banks and stuff. And anyway, I'm getting sidetracked, but let's just have a quick look at BH. Okay, it's still got ways to go. Let's have a look at PLS. Got ways to go. Let's have a look at Fortescue. Okay, it's got ways to go, but you could see it getting there. You know, I guess what my point is that catching a falling knife is incredibly difficult. I think it's way smarter to wait for something to stop dropping and at least base in and showing signs of bottoming before you put your trust in it and plunge into it. So obviously having a stop loss is pretty important. You know, I stopped off on PLS and I have to admit that my timing sucks. I thought, you know, it was bottoming here. It looked shit on a monthly chart, but on a weekly it looked like it was bottoming, and I was wrong there and had to take my losses. But this thing might, I mean, no one knows. I mean, this thing might be headed back down to 50 cents. I mean, who the hell knows? And I'm not going to, you know, invest in something at 350 and then just hope that it doesn't fall to 50 cents. I mean, this thing's in a free fall, and it could go wherever it wants to go. You know, the market is a rational as a place, right? MIN could fall, but I guess my point here is that there will become a time when it's time for me to step up and put these in the bottom drawer. And if the RSI and the monthly just keeps falling to the point of being at record lows, and then there's these mining companies that I'll just try and jump in some of the big boys who are actually profitable. You know, like let's say hypothetically Fortescue fell from 16, I don't know, down here to $4. You know, that sounds crazy, doesn't it? You know, and it probably won't, but it could. Definitely seen that sort of shit happen before, and it's the sort of thing that people, I've seen people telling me, where was it, that it was good value for the long term here. I think it was at $20 or whatever it was, but now it's at $16. You know, when I was at 20, 16 seemed a long way away, and I'm telling you, this thing could just halve from here. And there will come a time when I'm going to step in and get some in the self-managed super fund for the long term. It's not yet though. It's definitely not yet. So anyway, I thought that was interesting, and certainly something I'm keeping a close eye on. The other scan, I just love doing the certain scan when the market has a big down day. It's so simple, just 30 period breakup at the close and within 2% of the last 60 period highs. That's it, okay? I'll put a filter on, actually let's get rid of that volume one. I'll put a filter on just above a 50 exponential moving average and ignore results have volume less than 100,000. Okay, I'll do that scan, which which I've done a bunch of times tonight, and just there's a few stocks because it's interesting, what is holding up in this market and giving zero shits about the fall. Aristocrat is holding up really well. Okay, it's just tight in there, and this would be something that in the trading account, let's say we have another down day tomorrow in the market, but the Aristocrat all just sits right here, then boom. Okay, what else do I need? Okay, it's like kind of having a little cheap look at everyone's hands in a game of poker, and it's just the market showing you its hands in many ways. If the overall market's getting dumped, and the certain stocks are just setting up in this tight base and they're not dumping, then when that market turns around, it tends to be some of the best bets out there. It's still a gamble though. This is all a gamble, but it seems they can be some of the best gambles you ever take. And there's heaps that have held up if you do that scan for yourself. NXL, this is just a real leader, isn't it? But there's heaps, right? PME, down a bit today, but hardly down at all. Closed higher than it opened. And what's some others, like ResMed, so strong, just so strong. And then before I got out of here, there was just the last thing I wanted to chat about was just the potential turnaround in some of our kind of property developers. And I bring up Lendlease. Let's just get rid of this. It's pretty rare for me to bring up an RSI, isn't it? But let's just bring up Lendlease, which has just been a complete dog, hasn't it, of a stock for a long time. And let's just look at a weekly chart, go back 10 years. Wow, I mean, you'd be pretty salty, right, if you invested in this guy back in whenever, 2015 or whatnot, and you paid $15 for it, and it's 10 years later or whatever, it's at 6 something. But this thing is showing signs of breaking this huge downtrend, and it's been out of love for a long time. And I don't need to crap on about this country's issues with property and undersupply and how much building needs to actually happen to, for everyone to have a home. And there will come a time when these guys are getting some really big uptrends. And is this the start of it? I don't know, but it is showing signs of it, and it's just on the watch list here to see if an amazing setup comes along. It's like how I was talking about Origin all those years ago, for those who've been members for ages. And shit, well, my line's gone, are they? But this was showing, it was back here, wasn't it? But it was just this huge base back here. And I was talking about it on Breakout Wednesday, how it was been out of favour for forever, and it was breaking out of this huge base, and then it's kind of trended up since. It's kind of the same with AGL, and a lot of these big stocks are out of favour for a long time. They do put this big bottoming action in. It's when no one really wants them, and weekly charts and monthly charts are really the best way to look at it. I haven't made my mind up on Lendlease. I'm so scared to go into it because it's such a dog, but that's probably why I think I should probably need to fight that urge and maybe look at it harder, because the best positions, for these turnaround stories are the ones that kind of make you want to vomit at the thought of buying that company. And the way one of these stocks I look at, and I'm pretty in tune to the WA property market for reasons I won't go into, but like this little company Finbar and the ASX, I mean, it's been around when Perth was booming years ago. This thing was flying back here. Anyway, but it's in an uptrend already, and it's not the only real estate developer that's showing these uptrends. I could crap on about, show you some more, but Finbar's already had a run, and it's obviously leading, and it's would have been smarter to pile into that ahead of Lendlease. But Lendlease is the big boy and has some huge kind of contracts on the go with huge property development stuff, and it is one of obviously the biggest around in that. I've talked too much about that. The only other thing is that been stockpiling a little bit of cash, and if the market does start to vomit a bit, then I'll always dollar cost average into my favourites, which really is just the NDQs, the IVV, and gear have really kind of simplified my 3 favourite ETFs to those 3. You can't have too many, I've decided. Just I prefer to build bigger and bigger positions in those 3. And the other thing I'm just looking at is just good old Amazon for those that love trading large caps. This isn't ready. There has been some fake outs recently. Like if you look at Tesla, it had a similar pattern the other day. It just kind of faked out the other day and closed on its low. So Amazon's going to have to give me something special here. But if it can kind of give me 4 or 5 days inside bars within this bar and not really vomit with the overall market, then it might be worth getting in. I'm certainly being really careful of sorry, I'm having a bit of a brain fart there of the old leaders like Nvidia and stuff. Like if I just think that it's had its time, and it's pretty rare for this to keep running. It's going to have to give a special setup for me to go back into that. There could be a bit of rotation and stuff happening. But anyway, I've kept on for too long. That's really what's going on right now. I think it pays to not fall asleep just because the market had one down day. This is the stock market after all, right? And it's if you're not ready for serious volatility, then you're in the wrong game. You probably should just either face reality or move along. Because this happens all the time, and you've got to be ready for it. And you really got to. This is when I work. I mean, I've put in hours and hours today of work, right? Tomorrow I'll work. If you have another down day, which would be beautiful, I'll put in a shitload of work, okay? And there won't be one strong stock on the markets I trade that I don't really know about. And then when the market turns, I'll go from 90% cash to 90% invested in my trading account very, very quickly. And that's how accounts grow really, really quickly, okay? When you get, when you're ready at the end of a mini correction and you go hard after that, like those who are ready here, okay, bang, they just made some serious coin, and maybe it's given us another opportunity. But most people listening to this, and most traders I've ever met, this happens and they just fall asleep and they think it's too hard, and then the market rallies and they miss the whole thing, and then they start getting involved up here, then the market dumps and they start giving up again, and it's just this vicious cycle of frustration that they go through, and they never do any good. They never go their bank. They get old and they wonder why they never made any good money in the market, and it's because they're doing it opposite and they're letting their emotions control them. I'm ranting, but I'm telling you, like there's a holy grail of trading. It's get busy when everyone else is giving up, all right? And if we have another few big down days, it is go time. Cheers, guys. Bye.